Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, April the 16th, the year's 2021. Let's talk trading. It's time for the weekly wrap up. A reminder that these videos are for educational purposes only, and your results may differ from mine. And just to end the week on a good note here, let's just make sure that risk management was in place and will be in place on each and every trade, because you don't want to lose any more than you're willing to lose on any one single trade. Brain management, we've talked about that some this week. No fear, no regret, no pain. Money management, very important. When you're up, you have to take that profit before the market takes it back. I mean, once today, I think I was up 5 pips. Pound dollar spiked down in a blink of an eye. It was like, nope, you missed your opportunity. Okay, so here we go. Looking at the weekly chart, all the weekly gaps filled, so those traders were paid off. Now, very interesting. You see here on the week, we had previous week's low was 69.8. We got to 68.3, so it actually broke that low, so we won't have an inside weekly bar. As you can see, we're in the upper wick zone now. Prices retraced up through the body. And when we look at the opening range, we've got the opening range first day of the year, and we have the first day of the month, and we have the first day of the week. So you can see, I'll expand the chart, we have broken out of that first day range here for the week, and we're in that opening range for the month. So those horizontal line traders were paid off. 180 pips, 185 pips above the yearly open, 48 above the monthly open. Remember that monthly open, I believe, was 37.77. We were looking at that line in the past couple of videos because there's a lot of action around there. And here on the inside bar, you can see we touched the previous low. That inside bar actually broke it by a pip, but I've got a thick line so you can't see it on the chart. The daily inside bar from 3 days ago, you can see yesterday in and out, the day before yesterday in and out, and today in and out. So horizontal line traders at the 37.68 area were paid off. And once again, we're approaching that weekly inside bar high from 2 weeks ago. For the day, 6 pairs over 100 pips with the pound clocking in at 114. You can see we broke out at a previous day's high back at 38.08. We broke the previous low. There's a lot of trading here, and I was in a trade long down here, and I was targeting this area. I got out way too quick. Looking at the chart, you can see we took out the pivot at 37.90. I'm sorry, the pivot we took out at 37.84. The 37.90 is the future pivot point. So you pivot traders, if you were using that bias, it was slightly outside of the buy zone by just a couple of pips. So you may have missed out on these trades if you used it, or you could have said, you know what, that's not strong of enough magnet. I'll take the shorts, and you were rewarded. And then the long traders were rewarded later in the day. Rats, red rats. You still have a few hours left in the day. Don't know how much feasting there's going to be. We're 3 pips off of the high. Don't know if we're going to get that 20 pullback today or not. If you look here at the rat dots, you can see here we've pretty much been pulling back off of those highs. So I don't know if today is going to be more like this or like this. I don't know. It could even wind up like this. So we'll just have to wait and see. Okay, looking at the pivot here, excuse me, for the week. You can see here we reached that monthly pivot again at 138.21. This pivot here at 38.46 from 7 days ago hasn't been hit, but we took out the pivot from a couple of days ago, 37.37, which I believe, well, 37.78 is the monthly open. But I remembered that 37.77 number because it was right around the monthly open. So we were definitely trading that level across. Wick zone in and out. You can see here, once again, previous day's high, previous day's low, previous day candle top, previous day candle bottom, in and out. Range for the day, 114 puts us at the 59 percentile, biggest range of the week. High minus close 3, only at the 3 percentile, so the red rats are wanting to feast here. Close minus low, the green rats, 111 pips. If you nailed it, you really nailed that one. Buy zone traders, high minus open 56, open minus low 57. Not bad on the day. Weekly, 161. And the weekly only at the 12 percentile, so an anemic week. As you can see, we didn't break out of the previous high. Only 2 pips break out of the previous low, and that's a roundup. Range, high minus close. Once again, just 3 pips because we're at the high for the week. Close minus low, 158. So anybody taking that reversal trade was paid off nicely. Wall mall trading today at the 38 was really nice. Just going back and forth across that line. You can see here this 20 short didn't pay off much when it happened. And right now you've got the 30 and the 20 as the wall mall lines. But I think it's, what time is it? It's about what? If it's 10:30 here, that means it's 1:30 over in New York. I think those traders have probably wrapped up the day. So I don't expect too much to happen. Order block bars. Interesting, you have an order block here, order block there. And one thing about the order blocks, I don't know if I mentioned it, but and I probably did. You know, I just look at the chart and I go, okay, we're looking at a 1-hour chart, and right here, that's kind of the lowest high. So price came there, and this was the whole low. And as you can see, I would have gotten in that trade. Now, these order block boys and girls and non-binary traders, they would have probably entered here, and possibly they might have even taken a trade off of this level too. But I like to just think in things in terms of highs and lows, opens and closes. That way there's no argument. Is it an order block? Is it no? Is it a high or isn't it? No, it's what the platform says it is. But you know, the thing about this is if you look at these order blocks, usually they're in the rat zone. So Why are they successful? Because price, reverses off of highs and lows. It's that simple. Calling it something doesn't necessarily make it so. Now, the other thing was somebody was talking about volume, and I wrote a smart volume indicator, so that'll be coming out soon. So that's a little teaser for those of you who like volume. But you have to remember in Forex, it's tick volume, not trade volume. So you have to know what you're looking at when you look at it. Oh, that's right. I had these frequency distributions up again. So looking at those breakouts here, the H1 breakouts, and if you go back to the wall mall, you can see these H1 breakouts were pretty nice today. So, sometimes you don't need statistics. You can just look and go, yeah, I see it, because that's when things click. You have to be able to see it for yourself. In fact, there was somebody that said, all that stuff here you've got on the charts, he goes, you've got all this stuff over here and this stuff over here. And what was it? And this, he goes, you don't need that. Just take it off. Well, you know what? For that trader, they might be right. Maybe they don't need it. But for other people, they like to know in a glance of an eye, they can see which candles are red, which candles are green. How many green candles in a row do we have on H1, on H4, on D1? Look at that, 5 D1 candles in a row. Rather than having to flip charts, you can just, look out almost the corner of your eye. You can see what's going on. So, each to their own as far as ranges. Some people use them, some people don't. I like to know what the range is on my charts. I don't usually just have one. I usually just concentrate on the hourly range because, that's what we're looking at for the wall mall method. But as far as all those other, indicators, it's up to you. I mean, you can have the buttons here to change time frames and to change to different pairs. You can have it so you can see those candle colors. So you can look right here. Look at all these pound pairs. Pounds going up. They're all green. If you start to see these becoming red one by one, you might go, and the pound is lagging, you might go, oh, maybe I should get in on that trade. Or just the opposite. If you see the pound go red first and the other ones start to go red, you might have confidence to stay in that trade if you're short. So, it's not the indicator, it's how you use it. I mean, and whether or not you use it. Yes, I've written hundreds, if not 1,000 MT4 indicators. I can't even remember them all. Some of them I'll come across a post from, a decade ago and go, oh, yeah, I remember that indicator. That was pretty cool. But you have to use, whatever tools you find useful to trade what you're trading at the moment. To simplify it, yeah, I can get rid of everything. Just give me the horizontal lines. And technically, for doing the wall mall method, you don't even need those. I mean, in fact, I even asked wall mall earlier this week if he could trade without any indicators on the chart. Of course he can, but there's just certain things. Let the computer do what the computer's good at. Painting things, plotting lines. So telling me where price is in relation to something else. There's no reason for me to have to try and think about that. I'd much rather focus on the trade and what's important to the trade than take my time and make calculations when the computer can do it for me. So, fellow traders, I hope you had a profitable day, a week. I hope April's profitable for you, and I hope you got your taxes in on time. Actually, they gave us an extension, but I still try to get mine in when they're, on the April 15th day. So, have a fun and safe weekend. And remember, when you come back to trading, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is TheRumpledOne, over and out.